Hello XRP community. The alt-season clock is ticking, and the debate now has a concrete target. Systing Research has published a year-end 2025 forecast for XRP between $37 and $50. That may sound ambitious, but it rhymes with the trajectory we have been mapping here, where a late October ignition leads into a utility-driven Q4 as ISO 20022 becomes the common language for payments in November. Today we will lay out the timing, the catalysts, and the risks, and we will show the conditions that must appear on the tape before the move is real. Let's set the near-term window. Our working timeline points to a consolidation phase through most of October, followed by a decisive shift late in the month as policy clarity firms and liquidity rotates into higher beta names. The logic is straightforward. First, markets often digest one more round of distraction headlines and shakeouts before a sustained advance. Second, if the expected second rate cut lands in the last week of October, that lowers discount rates into year-end and historically supports risk assets. Third, ISO 20022's ongoing rollout provides a real-world anchor for tokens tied to settlement and liquidity. Put those three together, and you have a credible setup for alt-season to start in the final days of October and extend into November. Where does XRP fit in that structure? The thesis is that utility will matter more than hype in this cycle's back half. ISO 20022 standardizes rich, structured messages across banking rails, which reduces friction between networks and makes true real-time settlement more feasible. In that environment, instruments that supply fast, predictable liquidity across corridors gain share. XRP's role, high-throughput settlement with bank connectivity, directly addresses that bottleneck. If utility carries the day, XRP belongs in leadership. Now a quick market snapshot before we go deeper. After probing the 2.90 to 2.99 zone intraday, XRP is hovering in the high $2 range, with market cap momentum reflecting persistent interest even as price consolidates. Equities have pushed to fresh highs, and gold continues to print record territory. That cross-asset picture matters. Strong stocks with firm gold suggest investors are simultaneously chasing growth and hedging policy risk. In crypto, that cocktail often precedes rotation into selective altcoins once volatility compresses and liquidity stabilizes. Let's address the headline forecast. Systing Research puts year-end 2025 at $37 to $50 for XRP. Our baseline path remains 15 to 30 on conservative assumptions, but the upper tail exists if several drivers align. The math is not science fiction. Recall the powerful run from November through January last cycle, where XRP multiplied roughly 7 times over a short window. Repeating that magnitude from current levels would not quite reach the Systing target, but it gets uncomfortably close to the lower 30s and leaves the door open for extension if utility demand accelerates and flows broaden. Tell us in the comments the exact date you think alt-season kicks off and your XRP year-end target. If you want a one-page alt-season checklist covering price structure, breadth, funding, and exchange flows, write checklist, and we will publish it in the next update. Let's talk confirmation. Big numbers in forecasts mean very little without tape signals. For XRP, we are watching 3 layers. First, structure. Higher lows on the daily chart with expanding spot volume at resistance. That tells you real buyers, not just short squeezes, are in control. Second, derivatives. Rising open interest with stable, not overheated, funding. That is healthy risk-taking rather than one-sided leverage. Third, exchange flows. Net outflows from exchanges after red sessions, which implies accumulation rather than distribution. When those 3 stack up together, breakouts tend to hold. How does Ethereum's path factor in? Historically, major alt rotations gather durability when Ethereum advances, but does not completely dominate breadth. If ETH continues to grind higher without stealing all the oxygen, capital usually rotates across large-cap utility names, and that is where XRP can lead. The Altseason Index, a composite of breadth and relative performance, has spent months spacing. What it lacks is the catalyst that flips consolidation into trend. Policy clarity late October, plus the ISO 20022 backdrop into November, is exactly the kind of spark that can do it. Risk management matters as much as the bull case. What could delay or dilute Altseason? A rate decision that surprises in the wrong direction, geopolitical shocks that keep risk premia elevated, or regulatory timelines that slip just enough to sap momentum. None of these destroy the structural case. They can push the calendar out and force an extra leg of consolidation. Your playbook should adapt, not abandon. Define invalidation levels before the move. Size positions so a sharp 2 to 3% intraday swing does not force you out, and let confirmations dictate when to scale. Let's address the psychology of late-stage consolidation. Markets often test patience right before they move. Headlines will argue both sides, and price will oscillate around key round numbers. That is where data matters more than narratives. If funding normalizes while price refuses to break down, that is real information. If breadth improves beneath the surface, even while the index looks flat, that is information. If on-chain metrics show large wallets adding on dips while exchange balances fall, that is information. Stack enough of those signals, and a break becomes probability, not hope. Now the upper bound scenario. What has to happen for Systing Research's 37 to 50 to print by year-end 2025? You need the late October ignition, a smooth handoff into ISO 20022-driven adoption, a constructive macro backdrop into Q4 and Q1, and 1 or 2 corridor announcements that materially expand liquidity usage. None of these are guaranteed. Together, they create the conditions for price discovery to stretch beyond our baseline. The burden of proof is on the tape, and we will follow the data. A word on leadership and industry positioning. Attention will continue to swing between messaging networks, tokenization stacks, and settlement rails. That is not a zero-sum war. In the most likely outcome, multiple networks coexist. The winners will be those that deliver compliance-ready performance, predictable fees, and deep liquidity where institutions actually need it. XRP's job is simple and demanding. Be the instrument that moves value across those rails cleanly and at scale. To close, here is the roadmap. Expect consolidation early October. Watch for policy clarity late October, and look for structural confirmations before calling the breakout. If the move starts on schedule, November becomes the proving ground for utility-led flows under an ISO 20022 banner. In that environment, a conservative path places XRP in the 15 to 30 range with room to overshoot if adoption accelerates. The 37 to 50 band is the stretch case. Unlikely without multiple green lights, but not impossible if the macro, the rails, and the liquidity all align. Drop your exact Altseason start date and your XRP year-end target. If you want the checklist, say the word and we will publish a step-by-step guide to confirm the move in real time. Share this with one XRP holder who needs a clear, data-driven plan for Q4.